Goldman Sachs has written a very, very interesting piece as far as India is concerned, and this is particularly talking about, what's happening with crude oil prices, what's happening with inflation, US 10-year yield, and what essentially could be the impact of that. Now, remember, this is something which has been the talk of the town for the last 10 days, that US yield, what sort of an impact will it have? Crude oil prices, when they spike, what sort of an impact it will have on the Indian markets? And that's why probably they have triggered this particular report which they have written. Now, it's a combination of the strategists as well as the economists that they are writing this report. They say that inflation in India is expected to be about 5% in the coming months. However, they see a minimal impact as far as higher oil prices is concerned, because there is a room to cut down excise duty prices, and that means that prices on the retail inflation side may not go up. In fact, they believe that it will have an impact as far as finances is concerned, but it is not likely to be a very, very big one. Also, they have done some correlation between Nifty and oil over the long run, what has happened previously, and they believe that the correlation remains high and the correlation remains positive as far as Nifty as well as oil prices is concerned. Indian equities generally have posted a positive return on an average as far as commodity prices continue to rise. So that is something which their correlation throws out, that as the commodity or rising inflation happens, that is led by commodity, it is something which leads to positive returns as far as Nifty goes. Nifty, however, has been one of the best performing period as far as low and range bound inflation is concerned. So when core inflation is range bound, it is the best time to actually own Nifty. Now, in terms of India's strategy, or what they believe should be the strategy, so they were constructive on Indian equities. They have upgraded Indian equities earlier. In fact, they were one of the first few brokerages to do so when the market started to go up, and they continue to remain constructive. Now, their belief is that the earnings as an aggregate, especially for Nifty, will grow by 26 and 20% growth, and this will be the key driver to attract flows going ahead. They continue to favor banks as well as cyclicals, and particularly within cyclicals, they like investment names. They like commodity cyclicals to position for the ongoing cyclical recovery. So it's the high beta space that they like. It's the earnings growth that they like. Remember, their Nifty target does not have much upside from here on after the sharp rally that you have seen, but they still remain constructive, is what they say in this particular report. Banks, investment names is something which they like, and when you talk about investment names, it's broadly on the cyclical side. Earnings EPS upgrades or earnings EPS surprise will come in the Nifty. 20% is the growth that they are looking for. 26% is the growth that they are looking in for this year, followed by a 26% growth in the following year. That is what they are advising their clients, and that is something which will continue to be a re-rating event. Overall, cyclicals is what they want to own. Commodity cyclicals they also like because of the rising commodity prices. They do not really expect that will come down in a hurry globally, and that's why maybe they also like the commodity cyclicals, which is a part of their top pick list.